Friday rebalancing is the new must-do trade. They got to rebalance on Fridays, Pops.
Let's see what's happening here.
Let's see it. First slide, please. So this week, the market began the week up from the previous week. So i.e., the SPY's price increase from Friday's close to Monday's open from 669.21 to 671.62. We talked about those like gap moves yesterday on the market measure. This isn't necessarily a gap because the futures trade, but this is the gap on SPY just because SPY doesn't trade 24/5. Market usually starts the week up from the previous week in typical market conditions, but in 2025, it has been far from typical. So, this is just kind of a positive drift stat. Let's review some of the statistics to understanding why Fridays deserve special attention based on how the market has been opening this week, the weeks in 2025. So when we look at the study here, so we're going to the next slide here. So we're looking at 2015 to 2025, 10 years of data, and then we're bucketing the data based on this, of course, based on the SPY price, because we're looking at SPY here, but we're doing the Friday close price for the past 10 years, and then the Monday price open for the past 10 years. And we're comparing the impacts of the weekend moves from 10 years, from the past 10 years versus this year. So we're taking into context this year's trading action versus the past 10 years.
There's got to be some decent sized moves, I would think, over the weekend here on 10 years worth of data. Still goes down back only to 2015.
Do you think 10 years is going to be more volatile than this year? Average 10 years? That goes to 2015.
Percentage move or actual move?
Percentage. I think we do percentage in this. Yes, we're looking at percentages. I mean, we've had some pretty big volatility this year.
Yeah, I'm going to say
and
no.
Moves are big.
Yeah, I'm going to say the moves are big this year compared to 10 years.
I think so too. I mean, think about all the tariff stuff we had. Japanese yen. I mean, we've had all sorts of stuff.
Yes. Agreed. Well, let's see what happens.
Next slide, please. So over the past 10 years, the market has opened the week up 56.3% of the time, i.e. the Monday's open was at a higher price than Friday's close, nearly 56% of the time. That sounds like a lot, but that is positive drift. Positive drift over X amount of time. It's about 52, 53% of the time. I mean, they go higher. Mostly, if you look at a long-term price chart, it's usually higher.
Yes, usually
Market's
higher.
a little higher than it was in the 80s, 90s, 2000s, 2010s.
Yes.
Higher now. So similarly, the market opened up about 57% of the time on any given day from 2015 to 2025. So that's the actual percentage of the time the Monday's open was higher than the Friday's close is right in line with the last 10 years this year. So the percentage of time has been the same. Does that shock you?
A little bit. Yeah, a little bit. It does.
So we're looking at, the next slide here. So in 2025, the market has only opened the week up 51% of the time. In comparison, SPY has had about a 60% of opening up on any given day in 2025. So it has definitely skewed to the upside, which isn't a shock if you look at a chart of 2025. So the start of the week have been especially rough this year compared to any day this year. So Mondays have been kind of where you've seen a little bit of a pullback this year compared to all other days.
I don't think I could have guessed that. That would have been a pure guess.
Thought it'd be kind of.
It would be kind of flat. Yeah. Over
Mondays, you got weekend risk. There's,
yeah.
I mean, you price that into options when you look at like SPX options. There is weekend risk premium to those options.
Yep.
Next slide here.
Good job.
So while the weekend movement of 2025 haven't been nearly as volatile as in 2020 COVID times, roughly 25% of the weeks that started down have been outside the one standard deviation range, so much more than the 16% we would normally expect. So basically this year has had a lot of tail risk in both directions, and we've seen that play out. When you look at our two charts that we have here, we have the SPY weekly opening changes from January to October of this year. the one standard deviation bands as well. So you can see those, each data point from this year. And then you can see when we zoom out and we give you the 10 years, you can see our little portion of this year's movement has been much, much wider than previous years. I mean, you can take any little snapshot from the past 10 years, and this one has been exceptionally volatile. And a lot of that has occurred over the weekend.
And it's amazing because you got volatility relatively low, right? You would almost think just the opposite there. So it's good to put this at light. Roughly 25% of the weeks that started down have been outside the one standard deviation range. That's significant. I mean, statistically significant too. I mean, that's 2-3 times as much as you would think, 2.5 times as much. So it's pretty cool.
Yeah.
Good little study there by the team.
Next slide, please. So weekend moves have been much more volatile and tend towards the downside in this market environment. Of course, that can change. This means at the end of the week, portfolio management, and position recentering is even more important, particularly for shorter duration trades. You got to manage those positions end of the week. You should be looking to do something. If you've been waiting at the end of the week, if something's really going against you, make that adjustment because you see.
So keep your deltas in check is really what comes to mind here, right? I mean, like when you're going through the weekend, it's even more important than maybe even the daily moves during the week. I mean, you really have to, because obviously it takes more time. You have more time over the weekend, then you're definitely going to have to do something about that. So good study here. Reason why a lot of times the 21 days is right before the weekend on Friday. You want to kind of, as your risk gets closer to, as your movement risk gets closer, as expiration gets closer, that 21-day time, again, just kind of puts you out of harm's way and the maximum or optimal time to roll right there before the weekend. So good study there too.
Last slide for our takeaways. So in typical conditions, the market is more likely to start the week up from the previous week. That's called positive drift. However, in 2025, weekend moves have been more volatile than usual and much more likely to open the week down from the previous week. So you've had kind of your big moves occurring over the weekend, news-driven, tariff, whatever you want to blame it on. Therefore, it's important to appropriately manage positions and rebalance a portfolio towards the end of the week. You want to kind of button up positions before the weekend.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.